Welcome to the Deep Dive, where we cut through the noise of complex financial reports to bring you the essential insights. Today, we're plunging into Rubrik's second quarter fiscal year 2026 earnings ticker RBRK, a report that delivered some pretty robust beats, strategic AI moves, yet somehow left the market with a puzzling immediate share price dip. We're here to try and unravel that mystery for you.
Precisely. We've meticulously sifted through every detail of their latest earnings call. That was right after market close on September 9th. Our mission really is to break down Rubrik's performance, their strategic maneuvers, especially in cyber resilience and AI, and their future outlook, so you can quickly grasp the true trajectory of their business.
That's right. Rubrik has been making some incredibly interesting and impactful moves lately, and these latest results offer a real treasure trove of information to discuss. So without further ado, let's unlock the key takeaways and unpack this compelling story. All right, let's maybe start with the immediate headlines, the things that splashed across the wires from Rubrik's Q2 FY26. The company didn't just meet expectations, they delivered a solid beat, both top and bottom lines, comfortably exceeding what the market was looking for.
Absolutely. The numbers were quite impressive. Their non-GAAP EPS, that's earnings adjusted, gives you a clear operational picture, right? It came in at negative 0.33 cents. Now, okay, it's still negative, but a significant beat compared to the consensus estimate of negative 0.35.
Yeah, that's a big difference.
It is. And on the revenue front, they really impressed. $309.9 million. That's a robust 51% year-over-year increase, well above the $282.2 million consensus.
Wow.
And this top-line surge, overwhelmingly fueled by subscription revenue, that saw a stellar 55% year-over-year growth, hitting $297.0 million.
Wow, okay, a 51% revenue jump year over year isn't just beating consensus, that's making a statement. That kind of acceleration suggests some serious momentum brewing.
For sure.
But, as often happens in these situations, the market had its own swift reaction. And maybe a somewhat surprising one immediately after the announcement led to some interesting movements in after-hours trading.
The classic post-earnings shuffle.
Exactly. So beyond those immediate headlines, the real story for Rubrik often lies in the granular details, their financials, management's strategic vision. Let's peel back those layers and explore the depths of this report.
Right. And what's truly fascinating here is the consistent, healthy growth across several key metrics. Take their subscription annual recurring revenue, or ARR. That hit a remarkable $1.25 billion.
Okay.
Climbed 36% year over year. And it's not just the overall revenue figure. They saw a significant 27% increase in customers spending $100,000 or more in subscription ARR, now totaling $2,505.
That shows stickiness.
Exactly. It demonstrates not just new customer acquisition, but also their ability to, expand relationships with their most valuable clients.
Yeah.
Upselling them.
And the profitability picture. That also showed significant improvement, which is always something you, as a keen observer, should watch closely. The shift to profitability for a growth company is usually a huge milestone. What's driving this specific improvement, do you think? And how sustainable is it, given their ongoing investments in areas like AI?
That's a crucial question. We saw their non-GAAP gross margin expand to 81.6%. It's up from 77.0% last year.
Pretty healthy margin.
Very healthy. It's a clear indication of improved efficiency and, better leverage as they scale. But maybe even more striking, and this is often a fundamental re-rating trigger for investors, is their free cash flow. It turned emphatically positive, $57.5 million.
Right.
Remember, free cash flow is basically the money left over after paying for operations and investments. It's critical for financial health. And this marks a considerable swing from negative $32.0 million a year ago. They hit a robust 19% FCF margin this quarter.
Huge swing.
It really is. This isn't just a signal. It's kind of a declaration of their march towards profitable growth. Fundamentally alters their investment profile.
Okay, so those impressive numbers, the evolving profitability, it raises a critical question. How is Rubrik translating this financial muscle into its strategic future? Especially in, the red-hot AI space, the CEO highlighted exceptional top-line growth and strong cash flow margin, sure, but he also heavily emphasized Rubrik's evolution into a security and AI company.
Yeah, and this brings us right to the heart of their strategic narrative. The acquisition of Predibase is key here, explicitly aimed at delivering secure, efficient, and accelerated Gen AI. And they didn't just acquire, they've already launched the new feature, Agent Rewind,
Okay.
which leverages that Predibase infrastructure to essentially undo unsafe agentic AI actions. Think actions taken by autonomous AI systems without needing full system rollbacks.
That sounds useful.
It could be huge. It's not just a product, it's a strategic move. Positions them right at the intersection of critical AI safety and their core cyber resilience. Addresses a big emerging pain point for enterprises deploying more AI.
Right. So while they're building out this AI narrative, they're clearly not taking their eye off the ball. They're still expanding their core cyber resilience offerings. What's new on that front?
Absolutely core focus still. They've expanded data protection for crucial cloud workloads. Amazon RDS for PostgreSQL, Amazon DynamoDB, significantly bolstering their cloud footprint. And furthermore, Rubrik was named a leader again. Gartner 2025 Magic Quadrant for Enterprise Backup and Recovery, 6th consecutive year.
Wow, 6th year.
Yeah. And for those maybe unfamiliar, the Gartner MQ is a really influential industry report. It evaluates vendors on vision and execution. Rubrik was noted for being furthest in completeness of vision. That's strong validation. And it's crucial as they navigate this intensifying cyber risk landscape, where customers increasingly operate with an assumed breach mindset.
Meaning they assume a breach will happen eventually.
Exactly. So recovery capabilities become absolutely paramount.
In a market this competitive, that kind of validation from Gartner is massive. But beyond analysts, competitive wins are what really move the needle, right? Are they actually convincing customers to switch from established players? Or even newer ones?
Apparently, yes. Management specifically pointed to winning the vast majority of deals against both legacy solutions and even some new-gen vendors. They attribute this to their unique platform and specifically their preemptive recovery engine.
Okay.
This engine, in essence, pre-calculates a clean data state, allows for significantly faster recovery times, which is a game changer when every minute of downtime costs potentially millions.
It's absolutely critical.
They cited compelling examples. A major North American oil and gas company, a Fortune 50 pharma leader, both chose Rubrik specifically for superior recovery and efficiency. This isn't just about having a good product. It's about solving the most critical, high-stakes problems for large enterprises.
Okay, so given all this strong performance, let's talk guidance. Did this quarter's success translate into an upgraded outlook for the rest of the fiscal year?
Indeed, it did, and it signals pretty strong confidence from management. For Q3 FY26, they anticipate revenue between $319 million and $321 million. Non-GAAP EPS guided between negative $0.18 and negative $0.16. More importantly, though, they raised their full-year FY26 outlook across the board.
Okay, good sign.
Yeah. Revenue now expected $1.227 billion to $1.237 billion. Annual recurring revenue, ARR, projected between $1.408 billion and $1.416 billion. And crucially, free cash flow now projected $145 million to $155 million for the full year, reinforcing that profitable growth story. Non-GAAP EPS for the full year guided between negative $0.50 and negative $0.44. These are, material upgrades reflecting the strong operational momentum they're seeing.
That's a comprehensive upgrade. Now, they also mentioned material rights contributing to revenue. Can you just clarify what those are and sort of their impact?
Certainly. These material rights, they relate to specific credits. Qualified customers receive them during their cloud transformation journey with Rubrik, and those credits are now expiring. They contributed about 7 percentage points to Q2 revenue growth.
Okay, so a decent chunk.
Yeah, and they're expected to add about 6 percentage points for the full year. However, and this is crucial for you to understand, this is a non-recurring revenue stream.
Got it. One-time boost.
Pretty much. Minimal, if any, contribution expected in FY27. It's a temporary tailwind. They also discuss seasonality, expecting Q2 and Q3 to be somewhat similar in performance, with Q4 typically being seasonally strong. That's largely due to enterprise budget cycle, annual sales comp plans, often incentivizes closing bigger deals towards the end of the fiscal year.
Standard pattern for enterprise software. Okay. So we've just unpacked a really impressive quarter for Rubrik. Significant operational beats, clear strategic pivot into AI, raised full-year outlook. Yet despite all these positives, Rubrik saw that initial after-hours share price dip, about 5.5%. What does this all mean for you as an investor, and why this immediate disconnect between strong fundamentals and the market reaction?
Yeah, this is where it gets really interesting, and it raises an important question lots of investors are grappling with. Is this just market sentiment, or does it maybe reflect investors wrestling with Rubrik's evolving narrative? Is it truly an AI company yet?
Yeah.
Or are the core cyber resilience metrics still dominating the valuation?
Right, the multiple expansion question.
Exactly. The challenge is justifying that new, potentially higher multiple that comes with an AI growth story.
Wow.
Sometimes even strong beats can lead to a sell-off if expectations were just completely off the charts. Or if the market's looking for something specific that maybe wasn't explicitly stated, it suggests market positioning or, those elevated expectations might have driven the after-hours move. Rather than any fundamental weakness in the business itself, it's a classic case of navigating investor psychology.
It certainly is a classic case, and Rubrik has seen significant momentum, outperforming benchmarks like IGV that tracks global software and HACK, the cybersecurity ETF, outperformed both over the past month and delivered a remarkable 207% return over the last year since their post-IPO ramp.
Yeah, huge run. And if we connect this to the bigger picture, Rubrik is clearly tapping into robust macro drivers. We're talking the intensifying cyber risk landscape, right? Driving significantly increased spend on data resilience and recovery.
Definitely a tailwind.
Huge one.
Yeah.
And their consistent leadership in that Gartner Magic Quadrant further validates their unique position at the intersection of backup and security. The company's strategic shift to a security-centric data platform, now powerfully enhanced by Predibase for agentic AI. It places them in an incredibly high-demand, rapidly evolving market. They're not just participating, they're helping define it.
So with all these moving pieces, the strong results, the AI pivot, the market reaction, what are the key things for you to watch for in the coming months?
Well, execution risk always remains, particularly around effectively integrating Predibase and ensuring they can sustain that impressive net expansion rate, historically averaged above 120%. That's a high bar. Looking ahead, key catalysts for the next 3-6 months. Q3 results, obviously, but also concrete Predibase cross-sell wins. Early customer case studies for Agent Rewind need to see that in action. Additional cloud data protections, disclosures around large deal wins, those always help. The focus for investors will be on whether Rubrik can unequivocally sustain its shift from just high growth to genuinely profitable growth without sacrificing that crucial velocity and market share momentum.
Right, the balancing act. Okay, let's pivot now to our not financial advice segment. And remember, everyone, this is purely for entertainment and to spark your thinking, definitely not investment counsel. With that firm disclaimer firmly in place. Let's play the role of the hedge fund analyst. Pitch us a couple of outrageous but plausible trade ideas based on this Rubrik deep dive.
Okay, disclaimer understood. My first idea is maybe a bold contrarian one. A long position in RBRK via long-dated out-of-the-money call options, targeting, say, the 12 to 18-month time frame.
Okay, calls. Why?
The thesis here is simple. The market overreacted to the print, possibly shaking out some short-term traders. They might have missed Rubrik's fundamental shift to profitable growth and its unique position in cyber resilience and AI. So this dip offers, potentially, an attractive entry point for those betting on substance eventually triumphing over immediate sentiment, especially as Predibase integration and Agent Rewind case studies emerge as, future catalysts.
Betting on the fundamentals reasserting themselves. Makes sense. What's idea number 2?
My second idea is a pairs trade, long Rubrik, RBRK, and short a legacy enterprise backup provider, or maybe short a pure-play detection-focused cybersecurity firm that lacks integrated data recovery.
Interesting. The rationale.
The thinking is that Rubrik's differentiated preemptive recovery engine and its evolving security and AI platform, validated by Gartner, are driving significant market share gains by actively displacing older, less comprehensive solutions that assume breach mindset we talked about. It means customers have to prioritize rapid, immutable recovery, an area where Rubrik clearly excels and traditional vendors often fall short. So this trade capitalizes on Rubrik's strong competitive win rates, suggests a widening performance gap against its less innovative peers.
Got it. Capitalizing on disruption. Okay, 2 interesting thought experiments there, and that pretty much wraps up our deep dive into Rubrik's Q2 FY26 earnings. We've seen a company demonstrating exceptional top-line growth, making a significant swing to positive free cash flow, and really articulating a clear strategic pivot towards becoming a leader in both cyber resilience and enterprise AI.
Yeah, they've not only exceeded expectations on key financial metrics, but also confidently raised their full-year guidance, signaling continued strength in their market position and their execution capabilities. However, that initial market reaction really shows that even robust fundamentals can be subject to immediate shifts. Sentiment, broader market narratives, it all plays a part.
So here's maybe a thought for you to mull over as we close. Given Rubrik's demonstrated operational strength, its strategic expansion into AI, its robust competitive wins, is that initial market pullback truly just a transient overcorrection, maybe a gift for long-term investors? Or does it hint at some underlying anxieties? Maybe about the pace of AI integration, future evaluation, things the market is still trying to fully reconcile.
Something to chew on for sure.
Okay.
We definitely encourage you to dig deeper into these themes and form your own conclusions. Thank you for joining us on the Deep Dive.
Yeah, we really appreciate your trust and attention. Until next time, stay informed.